All right, we're going to go ahead and get started today. My name's John Randall. I'm a regional director for GoldenCare USA. I want to thank everybody for taking time out of their day to learn about the new Washington National product we're bringing on, Active Care. I think you're really going to find it an interesting product to really, Mark will tell you more about it. I don't want to steal any of his thunder, but it was a great selling product last year, and it's really come out of the gates hard this year, and we just felt like we had to wait, or we had to pick it up. We couldn't wait any longer. So from Washington National today, I have Mark Warnock. He's been there over 26 years. He's the Director of Sales for the South, and he's really good at servicing agents and their partners. And I think we're going to rely on him, especially at the beginning, for a lot of help. So hopefully we can overwhelm him, but not in a bad way, in a good way. Mark's going to go through the product today and touch on a few other things. And as you're going to see, it's a pretty complicated product, so this is kind of the first part. It's not a total training because that would take too long. So I'm going to go ahead and turn it over to Mark. Mark, I want to thank you very much for taking this time and doing this for us, and we're all very excited.
Well, thank you so much, John, and I appreciate it. And like John said, my name is Mark Warnock, and I'm going to be guiding you through roughly the next hour today. There's going to be two major topics that we're going to discuss. First, who is Washington National? What do we do? And what makes us a little bit different? That's going to be roughly the first 10 or 15 minutes of our program today. Then we're going to jump into the policy itself. We're going to discuss a unique policy in the market called Active Care. We're going to discuss three elements of that policy. First, why should your clients buy this policy and why now? Then why should you sell it? What's in it for you? What are the differentiators of the policy? What is its elevator speech, if you will? And then a good close look at the features and benefits of this very robust 75 benefit policy. Now at the end, I'm also going to, before we wrap up, I'm going to talk about two active incentive programs that we're presenting specifically to GoldenCare agents. And also, as John has noted, this is not as much a full training meeting as it is kind of a deeper dive overview or a get to know you kind of meeting, as we're not discussing any kind of underwriting or application completion, but it is going to be a pretty good examination of what this policy is and what it does. So let's go ahead and jump right in. Who is Washington National? Washington National is a 100-year-old company. We're originally formed in 1911, and our charter was to serve the products to the T-shirt marketplace, specifically with disability and medical insurance. Now, obviously, we have expanded our footprint pretty dramatically since then, and in those 100 years, we've manufactured just about everything there is under the sun and offered in the marketplace. But what we have over the years also realized is that we have a core competency, and that core competency specifically lay in supplemental health and life insurance. So we have put our blinders on, and that's really all that we do. Now, we are a wholly owned subsidiary of a fairly large company called CNO Financial. Now, they're just a holding company, but they own a couple other insurance properties that you guys may have heard of before, Colonial Penn and Bankers Life. But you're talking right now with the third leg of that stool, and that is Washington National. Now, CNO is a large company. They've got about 4.5 million policyholders. This drives about $4.4 billion in annualized revenue. We have about $35 billion in assets under management and have a risk-based capital ratio of about 437%. That is a long way of saying that we are a well-capitalized, well-financed, and best-rated excellent carrier. Now, Washington National in its own right, we're not a fly-by-night or a small company ourselves. We have more than 1 million direct policyholders, and we also manage more than 26,000 voluntary payroll deduction groups across the U.S. We're licensed in 49 states, and I have supplemental health products in 47 of those. This drives about $635 million in annualized revenue. We have about $4.6 billion in assets under management and a risk-based capital ratio even better than that of our parent company at 508%. Once again, long way of saying we are a well-capitalized, well-financed, AM Best rated A excellent carrier. Now, the last two bullet points on this slide, yes, these are dated bullet points roughly from 2018, but gosh, I think they're so cool, I still talk about them, so take this with a grain of salt. In late 2018, S&P picked up the CNO and Washington National stock and added it to its top 400 mid-cap. And the reason they did that is because they felt so good about the financials for Washington National that they added it to this important mutual fund for them. So we're pretty excited about that. It's not something I think that your clients are really going to care about, but I hope you find some pride in that. I certainly do. And then the second one is also a little dated, but boy, I thought this was really cool too. Forbes magazine named Washington National as one of its top 50 most trustworthy companies. Now, this wasn't trustworthy insurance companies. This was one of the top 50 companies across the U.S. in terms of trustworthiness. I thought that was just such a cool thing, and I still talk about it today, even though, to my knowledge, Forbes has not recreated that top 50 since that 2018 publication. Now, what makes Washington National a bit different? What do we do that is a little different? They're given a level playing field. There are roughly 4 different areas that we set ourselves apart from our direct competitors and reasons that independent agents have gravitated to Washington National over the years. And the first is service orientation. Now, what exactly does that mean? Well, Washington National is a big company. We have about 2,000 employees here at the Carmel, Indianapolis headquarters, and all of them right now, like you, are working from home. But given that, you're not going to need to navigate Washington National to get your problems solved and to get your issues addressed. You have a dedicated field support team consisting of myself, Shane Wilson, Paloma Escalante, and as a batter-up, David Golding. And this, along with myself, and this team is dedicated to serve all of the needs of all GoldenCare agents. And what this means to you is that when you wake up in the morning and if you've got a busy day and you know what, you've got 8 different things that you want to speak to Washington National about. You've got a policyholder change issue, you got a commission question, you've got a product training need, and then you've got a couple of apps that you're wondering if they got issued. You can leave us a message with all of those questions. We'll run around to the various offices within Washington National to get those things addressed and to get those questions answered for you, all while you are going out and doing what you do well, and that is generating revenue for yourself and for GoldenCare. We'll report back to you with the answers to those questions. We're far from perfect, but what I have found in my 26 years of travel is that insurance companies are moving away from service. They're driving agents to self-service, and we're actually doing the opposite. We want to surround our agents and our partners with service so that we can give you guys the same value proposition that you give your clients, and that is that we are going to surround you with service. The second area that I think is a differentiator is market flexibility. In our supplemental health field, there are, I would describe us as siloed. And by that I mean there are some companies out there like Aflac and Colonial and Transamerica and Allstate Worksite, very good companies, but they only work in the payroll sales slot. They only work that vertical. And then there are some other fine companies, Family Heritage and Global and a couple others that really only work in the direct space. What makes Washington National unique is that we operate with equal flexibility and equal strength in both markets. And to illustrate, about 51% of our business is in the direct and senior market side, and 49% of our business is in voluntary payroll and true group sales. And what does that mean to you? Well, what that means to you is if you're carrying around Washington National in your electronic briefcase, it doesn't matter what your next lead is or where your next referral is, Washington National is going to have a gap-filling solution for you. If it's a group, if it's an individual, if it's senior, doesn't matter. We can help you. And I think that makes your world just a little easier to manage. But also note that we are experts in the senior market space, and 7 of our products in our portfolio are specifically address the needs of seniors. And we think that is an advantage to you as well. The third area is product differentiation. We recognize that it is important for the products that you sell to be at the very least competitive. And friends, I can give you that. But it's even more fun when we can talk about products that really we have no competition. We may have some products that look a little like it or feel a little like them, but none that are direct competitors. And one of the products that fits that bill we're going to talk about today, and that is Active Care. Another benefit that we developed way back in the old days that is a differentiator too, and we're going to talk about this in a little more detail today, it's called return of premium. And essentially what this is saying is that we will return unused premium to your clients after a given period of time. And what this rider is doing for your client is creating an environment where they cannot lose. I'm not sure that you guys have ever sold or currently selling now a product where you can look your clients in the eye and tell them and be truthful with them that if they buy this policy with this rider, they cannot lose. The worst that will happen is that they'll break even. There aren't many products like that in the field, and you're going to have one today. Now, obviously, Hospital Assure is a policy that is an important policy in our marketplace. There are other hospital indemnity products out there, but guys, give this one a look. This one is very, very competitive, well priced, and well comped. And then our accident policy, friends, I'm going to put our accident policy out there to compete with any other indemnity accident policy in the marketplace. You're going to be proud of it in terms of cost-benefit ratio, of comp to the company, as well as price to the client. And then lastly, the fourth area is going to be technology. Now, I will be the first to tell you that we got into the technology business late, but when we did, we got in aggressively. We invested heavily in our technology suite, and we have a technology suite that we're very proud of. It functions both on the direct side of the business as well as the worksite side of the business, with a bunch of tools that go beyond an electronic application, including premium tools, rate engine tools, so that you guys can develop rates even before you go see your client, or do rate quotes while your client is in front of you without having to complete an application, as well as core enrollment tools as well, and we can get into that at another time. But know this, you can be proud of the technology that Washington National has. So that is a little bit about who we are, what we do, and some of the things that make us different. What are the differentiators for you in terms of representing independently Washington National? Now with that, let's go into our portfolio before we jump into the product. And I'm not going to spend too much time on this, enough to say that we have an indemnity cancer policy, an indemnity accident policy, an indemnity heart stroke plan, a hospital indemnity policy called Hospital Assure, and a lump sum critical illness policy. Now, if you take all of those policies and kind of mush them together with one universal application, you're going to get Active Care, and that's the policy that we're going to be talking about today. But also on the worksite side of the business, we have a universal life policy, 3 true group employer-owned policies, a short-term disability policy that's specific to the worksite, and then we'll round out our portfolio with a final expense policy that is specific to the individual and senior market. So with that, let's talk about active care. The first thing I'm going to talk about active care is the kind of elevator speech, or what is this bad boy? Now, when I was asked to develop the training program for this policy, I really consider this policy or describe it in three different ways. First, what is this policy in terms of its functionality? And that is, or what is the elevator speech of this policy? It is a gap-filling solution for all the gaps in coverage that you're likely to find in any high-deductible major medical market or any senior product medical marketplace as well, including Medicare, Medicare Advantage, and Medicare supplement policies. It is a gap-filling solution. All medical policies that are owned by individuals have deductibles and copays, and depending upon how large those deductibles are is that personal responsibility. That is the gap that we're looking to fill. The other gap that we're looking to fill are benefit limitations designed in the policy to limit the exposure of the policy. And once again, these policies address that by paying directly to the consumer. Now, the second way that I've kind of chosen to describe this policy is kind of going back to the old days when I was selling supplemental health policies to agents, and I got a lot of agents that said, you know, I like your cancer plan, I like your heart stroke policy, and I like your accident plan, but you know what, I don't want to fill out 3 applications, and I don't want 3 different deductions, so what can you do for me? Well, back then I had to say nothing. I can't create a universal application. We can't get our compliance and actuaries to design on questions without it being 4 feet long. So then I just had to tell them, you know what, we just have these standalone policies. Today, we have active care. The third way that I describe this policy is if you took the most popular benefits from the most popular supplemental health policies in the marketplace, and for the sake of argument, let's call that lump sum, critical illness, cancer policies, hospitalization plans, and heart attack stroke plans, and then indemnity accident policies, and mush those all together with one policy, with one universal application, you have active care. It is a gap-filling solution for the gaps in medical plans that you're likely to find in any of the markets that you folks serve. So, as an overview, Washington National's active care policy addresses 17 different types of critical illnesses, 14 different types of accidental injuries. We support it with lump sum benefits ranging from $5,000 up to $100,000 in lump sum benefits that are paid directly to the insured, and yet they can use that money any way that they see fit. This policy is underwritten with a simplified issue underwriting. So health questions right there on the application, they're yes or no questions, which means you're going to know at point of sale if your policy is going to get issued and if you're going to get paid for that plan. On top of that, these policies are guaranteed renewable for life, meaning that as long as your client is paying the premium, and by that I mean the original premium that they bought the policy on, because these rates don't go up, they're going to have that policy for their lifetime. It doesn't matter how old they are, we're not going to increase the rates. It doesn't matter how many times they use the policy, we're not going to increase their rates. And we're not going to decrease compensation based on age or usage as well. We also have never raised a rate on any of our existing policyholders in our history, and we have started selling supplemental health policies in 1970. So I can't say that we're never going to raise a rate. But guys, I can tell you, it is a market determinant that we don't raise rates, so we're going to do everything we can not to do so. Now, because this is a simplified issue policy, we turn around policies very quickly. Once you submit the policy, 24 to 48 hours later, that policy is issued, and within 5 days, your client is going to have their policy delivered in the mail. And then other differentiators that we're going to talk about today include cash value and premium return riders built into this plan. So with that, let's jump into the first of our 3 elements today, and that is, why should your clients purchase an active care policy? Friends, we've all seen these stats, facts, and figures before. Half of all men and 1/3 of all women will be diagnosed with cancer at some point in their lifetime. If you roll that up, that means 112 million Americans will be diagnosed with cancer in their lifetime, and that is an astounding number. It's so big we probably can't even really wrap our minds around that. So let's break it down another way. If you break down the number of people just this year that will be diagnosed with cancer, and let's go just under age 55, we're talking about 1 million people will be diagnosed with cancer that are under the age of 65 just this year. Now, if you add in those that are over the age of 65, or 55 rather, that number jumps to 1.685 million people will be diagnosed with cancer just this year. And we're talking about a pandemic that has affected 1 million people just this year, but cancer is going to affect 1.685 million people this year as well. And we're for some reason, we're not talking about that nearly as much. But here's why that is so important. The sub-bullet point. According to the American Cancer Society, 61% of all of the costs that are set aside to treat cancer, 61% of those costs will come out of your client's pocket. They are not paid for by major medical, Medicare Advantage, or Medicare supplement policies. They are paid for by your clients in terms of benefit limitations, deductibles, and copays. Let that sink in. 61% of the trillions of dollars that are spent each year on cancer treatment costs are paid by your client. 1.3 million people are going to suffer a heart attack this year. 50% of those people will survive. There are more than 5 million stroke victims alive today. And the one thing that these folks all have in common is persistent and possibly catastrophic out-of-pocket medical costs. 38 million people are going to receive medical attention this year for an accidental injury. Now, I'm not talking about permanently disabled and can never work again. I'm talking about 38 million people are going to lose some or going to have some work restrictions because of a medical or an accident. And seniors are a big chunk of this, falling down and hurting themselves. As a result, 82% of all accidental injury costs are out of pocket, not paid for by major medical, Medicare Advantage, or Medicare supplement, even health share policies. And so if we kind of boil this all together, then we talk about hospital stays. 45% of all healthcare costs are tied to hospital stays because the average hospital confinement cost is about $1,100 out of pocket for the client, and the average stay is 5 days. These are big numbers. Now, the reason that I'm sharing all these stats, facts, and figures with you is because each one of these stats, facts, and figures is a person. It's a real person that has experienced this, and you can help these people because this policy can address each and every one of these concerns. So now let's talk about the second element of this policy, and that is, why should you sell this active care plan? First, this is a robust and rich benefit plan design. It includes 75 lump sum and indemnity benefits that are packaged into one policy. This also has a very wide issue age range, the widest issue age range of any policy in our portfolio. From an 18 to 85-year-old can purchase this policy depending upon your state, and in Florida, it's 18 to 74. The coverage, as I mentioned, is guaranteed renewable for life. Benefits will not decrease, their compensation will not decrease, and the rates will not go up based upon your client's age or usage. Now, one thing to kind of wrap your head around, and I'm going to do my best today to describe this is a modularized plan design. It has a cancer module, a heart stroke, a critical illness, a hospital indemnity, and an accident module. And because of that, you can pick and choose within certain limitations the modules that your client is going to need by what frightens them and what concerns them, but also what modules you need to hit a particular price point. So the takeaway here is it's a modularized plan design that you can customize to each one of your client's needs. This is also a simplified issue policy, so you're going to know at point of sale if your policy is going to get issued. And we only look back 5 years for major health conditions. So if your client has had their last cancer treatment 5 years ago, we're good to go. They can purchase this policy with cancer coverage and receive coverage all over again should they have a recurrence of that cancer. And we don't do any, no MIBs, no PHIs, or no other tests needed to underwrite this policy. And we don't ask any family history questions. And that is a big differentiator in this plan, because at the end of the day, who needs this policy more than someone who has experienced one of these critical illnesses or issues in the past? Now, another important feature of this policy, and I hope you guys get this, but if you don't, I'll describe it again sometime down the road. But we have blended lump sum and indemnity benefits in one plan design. Now, why is that important? Well, there's two kind of schools of thought here. The old guys like me kind of grew up selling indemnity benefits. These are schedule of benefit policies. And these policies are very good for the client because they're there all the time. As many times as your client files a claim, that benefit is going to be there. It's a little tricky, however, to put together a presentation that your client is going to understand how the benefits are triggered, how they would get paid. A little bit of trickiness there, but those are the old style plans, and a lot of us grew up selling those plans. The newer style plans are lump sum plans. These address if you are diagnosed, God forbid, with an internal cancer, heart attack, or stroke, we're going to pay you this lump sum benefit of money. And that is a pretty easy sales presentation. But then a lot of these policies are one and done policies. Once you receive your lump sum benefit, the policy ends. Not so with this policy. By blending indemnity benefits and lump sum benefits, you can sell this policy with the ease of a lump sum benefit presentation. But know, because of the indemnity benefits and recurrence benefits built into the policy, that this policy is going to be there whenever your client needs it throughout their lifetime. Now, as I also just alluded to, we also have built-in recurrence benefits in this policy. So once your client may file a lump sum claim and get paid, their policy still continues because they have lump sum benefits in the other modules, but they also have recurrence benefits for the modules that they receive as well. So more on this as we go through the policy. Now, the other differentiator here is that even if you maximize all of the lump sum benefits within your policy, your family members still have their full access to their full benefits for every covered member of the plan. Once again, this builds lifetime usage into the policy, which simply increases your persistency in this policy, an average of 14 years. Just remarkable. We also have benefits that we've never covered before in this policy, including Alzheimer's and complications due to diabetes. I'll talk about these specifically. We have wellness benefits where we can pay benefits even when the insured is healthy. And this policy helps solve some problems that even exist within our portfolio itself. For example, I've got a great hospital indemnity plan, but that hospital indemnity plan, I can only sell it to age 65. Here, I can sell the hospital indemnity benefits up to an 85-year-old. My accident policy is one of the best standalone accident policies in the marketplace, but it's got limitations. I can only sell it up to age 69. Here, I can sell accidental injury benefits to an 85-year-old. And you're not going to see this on the slide, but please write this down. I can sell heart attack stroke benefits even up to $100,000 to someone who has full-blown diabetes. Friends, there is no carrier on the marketplace that I'm aware of that will sell a $100,000 lump sum heart attack stroke benefit to someone who has full-blown insulin-dependent diabetes. That's just remarkable. And it is a differentiator, and you can take that to your clients. So that's why you should sell the Washington National Supplemental Health Active Care Policy. Now let's address some of the features and benefits of the plan. Now, as I mentioned before, this policy has 5 different modules: cancer, heart attack, stroke, critical illness, hospital indemnity, and accident. And we're going to touch on each one of those modules and the benefits within those modules, and we're going to start with the cancer benefit. Now, the cancer with recurrence benefit has a core benefit of a lump sum benefit that ranges between $5,000 and $100,000 payable upon the first diagnosis of cancer after the effective date of the policy, which means that your client can be a prior survivor and still get the policy. Now, we also have partial benefits and indemnity benefits built into this lump sum module. The first of our partial benefits is a carcinoma in situ benefit. Now, a carcinoma in situ is just a fancy term for a stationary tumor, but we'll pay 25% for that coverage or for that incident because they're pretty easy to identify, fairly easy to treat, with 75% left over for a secondary cancer diagnosis. Now, the first of our indemnity benefits in this plan design is a skin cancer benefit. Should you be diagnosed with any kind of skin cancer, we're going to pay a one-time benefit of $300 directly to you for any non-melanoma or even melanoma skin cancer. Now, annual care benefit, what I want you thinking here is a wellness benefit after diagnosis. So once you're diagnosed and receive your lump sum benefit, we're going to give you $75 on the anniversary date of your diagnosis each and every year. You don't have to file a claim to help pay off your medical expenses to get that wellness checkup, to make sure that you're still not at risk for a secondary cancer diagnosis. Now, should your cancer put you in the hospital, we have hospital indemnity benefits even within this module. There are two triggers. You have to be admitted and you have to be there for 24 hours. If you are diagnosed with cancer and you are hospitalized and you click those two triggers, we will pay $300 per day. We'll pay it 3 times per year for 3 days each stay and a total max benefit of $15,000. Now, there's a lot to unpack there, and I covered it pretty quickly. Just keep in mind, we're going to talk about this particular benefit 4 more times as we walk through this policy. So hospitalization is also covered under the cancer module. Now, we've got a couple of buy-up options within this module too. Radiation and chemotherapy. These are indemnity benefits, meaning they will pay every time your client uses them. So if your client has radiation, we'll pay $200 per treatment, up to $5,000 a year, rolls over to 0 every year, no lifetime maximum. Injected chemotherapy pays exactly the same way. And oral chemotherapy pays $300 per month for 36 months. Does not have to be consecutive. They can come in and go out of this benefit whenever they need it. It pays on top of any other radiation and chemotherapy benefit they may have with any other company or even Washington National products. So that is our first module, is a cancer module. The second module is our heart stroke module, and you're going to see that it has many of the same kind of features, featuring a core benefit of a lump sum benefit that ranges between $5,000 and $100,000, paid for a diagnosis of heart attack or stroke after the effective date of the policy. So once again, your client can be a heart attack stroke survivor as long as they've gone 5 years treatment-free. And even within this module, we have partial benefits and indemnity benefits. The first of our partial benefits is a coronary bypass benefit, pays 50% of the lump sum benefit for a coronary bypass with 50% left over for a secondary diagnosis. Angioplasty, stents, and TIAs all pay at 25% with a 75% left over for another heart attack or stroke diagnosis. Like the cancer, should your heart attack put you in the hospital, we will pay $300 per day. We'll pay for 3 days. We'll do this 3 times a year, or a maximum lifetime benefit of $15,000. So friends, if you're keeping score, we're now up to $30,000 of available hospitalization benefit that pays on top of the lump sum benefit and is available to each and every covered member of the family. Now, I'm hoping you're starting to realize here, wow, this is a rich plan design, and there's a lot to unpack here for the client. And this will even increase as we move through the policy. Like our cancer plan, we also have an annual care benefit, once again, a wellness benefit that is intended for post-diagnosis wellness care, where we will automatically pay $75 to your client on the anniversary of their heart attack or stroke diagnosis each and every year for the next 5 years. They don't have to file a claim for this benefit. Now, each one of these modules, the cancer and the heart stroke module, all have recurrence benefits, meaning that once you have your full lump sum benefit paid to you, you still have lump sum benefits available to you, and that is detailed at the bottom of the slide. Now, you got to go a year from your initial diagnosis so you can start building up some recurrence benefit dollars. But you can see after the first year, it grows by 10% up to year 5, where you get 50% of your benefit in a secondary or a recurrence benefit. So let's say, for example, you had a cancer policy. You had a cancer diagnosis, an internal cancer diagnosis. We paid the full lump sum benefit of, say, $30,000. Now, 5 years later, you're diagnosed with even a different type of cancer or a recurrence of the original cancer. We're going to pay another $15,000 to your client, or pay a $45,000 benefit for a $30,000 benefit. And keep in mind, this recurrence benefit applies to each and every covered member of the family. Once again, a rich benefit design for your clients. The third lump sum benefit of this policy is our critical conditions benefit. Now, this is where we're kind of packaging many of the benefits that we've never covered before as a supplemental health carrier. These include a major organ transplant benefit of 100%, and if you go on the major organ transplant list, we'll pay 50% of this benefit and pay the other 50% when you actually do get your transplant. We also have paralysis and coma all paying at 100%. Blindness paying at 100%. And we've got a very unique benefit here. It's a diabetic amputation benefit. So if your client has diabetes, and God forbid they should have their foot removed because of bad circulation and risk of infection, and it does happen, we'll pay 50% of that benefit with 50% left over for a secondary critical conditions diagnosis. We also have a unique benefit here in an Alzheimer's diagnosis benefit. So if your client is diagnosed with Alzheimer's, can't be dementia, it's got to be Alzheimer's, we'll pay 50% of their lump sum benefit with 50% left over for a secondary diagnosis. Deafness is covered at 25% with 75% left over for a secondary critical conditions diagnosis. End-stage renal failure, often known as kidney failure, pays at 25%. And should your critical conditions put you in the hospital, we will pay a $300 per day benefit. We'll pay it for 3 times or 3 days per stay. We'll pay that benefit 3 times per year, or a lifetime benefit of $15,000. So once again, as we're keeping score, we're now up to $45,000 of available hospital indemnity benefit, or a hospitalization benefit, that pays on top of the lump sum benefit and is available to every covered member of the family. So those are the first 3 modules of the policy: a cancer, heart attack, stroke, and critical conditions. Now, these 3 modules are lump sum modules. They've got lump sum plus partial benefits and some indemnity benefits. Our 4th module is a hospital indemnity benefit. This is an indemnified benefit, which means when they experience a hospital stay, we will provide a benefit. Now, if their hospital stay, once again, there's 2 triggers. They got to be admitted. They got to be there for 24 hours. But it's for any reason that they are in the hospital. It could be for sickness. It could be for cancer. It could be for an accident. It could be for asthma. Anything, any reason they're hospitalized, this will pay $200 per day that they're in a regular room, and $400 a day if they're in ICU or subacute ICU. And we'll pay 3 days, 3 times a year, or a $15,000 lifetime maximum. So now, guys, we're up to $60,000 of available hospital indemnity benefits that are paid on top of the lump sum benefit and available to every covered member of the family. Now, one limitation of this policy is that we do cover pregnancy, but you got to own the policy for 2 years before this benefit is payable to the client. And gosh, I really questioned our actuaries when they came up with this. This was an overreaction to some claims experience that we had on an old policy. because humans don't have a 24-month gestation period. Elephants do, but we're not covering elephants in this policy. This has since been corrected in our hospital shore policy that's only a 10-month wait. But here you got to wait 24 months before pregnancy, and that pregnancy stay in the hospital is covered. Within this policy, we do have wellness benefits that are paid directly to the client when they're healthy and just getting wellness checkups. We pay $75 for office visits, $200 for outpatient surgeries, and we also have $200 for short-term medical stays, all paid within this pretty compact and tidy hospitalization benefit. Our last module is the accidental injury module, and like our hospital indemnity, it is an indemnified benefit, meaning that there is a schedule of 54 accidental injury benefits, each with a fixed benefit amount that would pay directly to the insured should they have that condition and be treated for that condition. The first such conditions include an accidental death and dismemberment benefit up to $50,000 that covers a common carrier vehicle or any kind of pedestrian accidental death, pays directly to the family members, and it all pays exactly the same. We do have dismemberment benefits, not fun to talk about, but folks, let's face it, it happens. And we have dismemberment benefits depending upon the type and the limb dismembered that range from $1,000 up to $25,000 depending upon the dismemberment. We do feature a fracture benefit, which pays a fixed benefit for the type of fracture that they have. We don't care if it's a partial or complete or even a hairline fracture. It all pays exactly the same, and we range from $200 up to $1,200 depending upon the fracture. For example, a hip or thigh is going to be $1,200, a shoulder is $500, a forearm is $600, and so forth. And it pays the same for the primary insured spouse or child. Dislocations are paid if they're treated within 90 days. Now, this is an important notation here because we want that benefit paid and treated within 90 days. If your client, for whatever reason, maybe doctor's advice, does not get that dislocation treated within the first 90 days, we're not paying the benefit, and we're not going to negotiate on it. It's just not going to happen. Tell your clients if they're hurt, go get it treated. There's no good reason to wait. And we'll pay between $200 and $1,000 for a hip, knee, or wrist dislocation. Surgical or non-surgical, it all pays exactly the same. We also have a joint replacement benefit that pays $5,000 for a joint replacement. Now, one thing to note here, it's got to be a joint replacement because of a covered accident. It can't be just like a worn-out knee. Lacerations are covered if they're repaired within 72 hours. I know this because I'm an idiot that cut myself and I didn't get it covered or addressed in 72 hours. I needed stitches. I was traveling. I didn't get it done. And this benefit's not going to pay. And my doctor wasn't going to sew me up because I waited too long. Get that laceration completed. Have your client make sure if they get hurt, there's no good reason to wait. Go ahead and get it treated. We'll pay $100 for each and every laceration. Injuries requiring surgery like ruptured disc, torn cartilage, or hernia, you'll note if you look through the benefit design here, we pay one style of benefit for the first year, and in some cases we're tripling the benefit in the second year of holding the policy. What we're trying to avoid here is having somebody buy this policy, get their hernia repaired, get the benefit, and then drop the plan. So we're actually tripling that benefit in the second year of owning the policy. These surgeries cover between $100 and $300 for that benefit. Second or third degree burns, if treated within 72 hours, pay $500, same benefit for every member of the family. And if you are in the emergency room or urgent care for any reason, we'll pay $250 for each and every urgent care visit. Physician's office, like follow-up visits. If I break an arm and I have my emergency room visit, but then I've got my follow-up with my physician, we'll pay 2 visits at $30 per visit, no lifetime maximum, and we'll pay it for each and every covered member of the family. What is important here to note is all of the benefits that I've discussed so far in this policy, none of them coordinate with any other policy that you have, not even Washington National policies. So should any of your clients purchase multiple Washington National policies, even if they share some common benefits, just know that both policies, this and the standalone policy, are designed to pay the allotted benefit to their client without coordination or deduction of one of those benefits. Once again, an advantage to you and your client. So what I'm going to talk about next are two riders. And I'm really going to focus on the cash value rider, but I'm going to touch on both riders. These two riders are valuable in the sense that they are a differentiator between you and other carriers that may provide supplemental health policies. And these riders are what I referred to at the beginning of the presentation as riders that can create an environment where your client cannot lose. So here's how these policies work. If your client owns the policy and they own it for a certain period of time, in this case 25 years, and they never used the policy, they're going to get all of their unused premium back paid directly to the client. Now, this is an issue-age policy, so just receiving their premium back does not terminate the policy. They're going to go into another cash value cycle, and they're going to be paying the same rates that they paid when they originally purchased the policy 25 years ago. Now, this is good for the client because it creates an environment where they cannot lose. It's also good for you because you're going to receive persistent commissions, renewal commissions on that policy that could last a lifetime. We have folks that are on their third cash value cycle that originally purchased this policy. So here's how cash value works. You got to own the policy for 5 years. If you terminate the policy anytime within the first 5 years, you're not getting any premium back. However, if you terminate within the sixth year for any reason, you're going to get 5% of your premium back. Now, it stair steps in value up to year 25, where you get all of your premium back, less claims incurred. So even if you have made some claims, let's say some wellness claims or a couple accident claims, that did not, the claims you received did not eclipse the premium that you put into the policy, you get the remainder back. Your policy doesn't terminate, and it doesn't reset at a new age. This is good for you, and it's good for your client. Now, return of premium has the same concept in that it is designed to return premium to the client. However, it's a little more restrictive, but has a shorter benefit period. Here's how it works. Once you purchase the return of premium rider, you got to go 20 years. And at that 20-year period, you get all of your premium back, less claims incurred. Now, if your return of premium period begins at age 55 or younger, you'll get your premium back every 20 years. If your return of premium period begins between ages of 56 to 65, you're going to get your premium back at age 75, whatever that amounts to. And then if it begins at age 66 or later, we're going to return your premium every 10 years. And now the return of premium and cash value are both offered in every state as two premium return options. Folks, if I was going to choose any one, I think a better value for the consumer is the cash value rider. Yes, it does have a longer maturity period, but it also gives your client options. Should they terminate the policy or, God forbid, pass away in year, say, 17, they're going to get that value of their unused premium returned to their family members. And straight return of premium, you got to go 20 years regardless. So, in review, this policy has 17 different types of critical illnesses, 14 different types of accidental injuries, lump sum benefits that range from $5,000 up to $100,000 in lump sum coverage, simplified issue underwriting, so you're going to know at point of sale if your policy is going to get issued. We have very quick turnaround times, so once the policy is submitted, either electronically or paper, and I urge you to use our electronic application, we'll issue that policy within 24 to 48 hours, and we have commission runs that go out every Friday. And like I said, this policy does feature some value valuable differentiating riders, including our cash value and return of premium benefit riders. This policy has really found its own. It's been on the marketplace for about 5 years, but last year it was unique in that it became our #1 best-selling policy, and we issued more than 12,000 active care applications last year. This is a remarkable plan. It's a differentiating plan, and folks, I urge you to consider marketing this plan to your clients. Now, before we open it up for questions, I did want to provide a couple of quick incentives for your clients, or for you, rather, and there's going to be 2 of them. The first has no time frame, and this is what we call the George Bucks program. Get it, George Washington? For your first issued application, I will provide a $20 gift card plus a handwritten thank you note from me for your first issued application. On your 5th issued application, I'm going to put $100 in your commission account. Now, if you're a licensed only agent, I will alert the friends at GoldenCare that this $100 is in the account and it should be paid to the agent. And if you are a direct paid agent, we will pay directly into your account. Now, on your 10th issued application, I will issue another $100. So you're going to get $220 for your first 10 applications. Now, on top of that program, which applies to everybody and doesn't have a time frame, I do have a production bonus that does have a time frame. And I will pay $300 for $10,000 of issued premium. When you hit $20,000 of issued premium, I'll pay a $600 bonus. And when you hit $30,000, I'll pay a $900 bonus directly to you. And for the first 3 GoldenCare agents that hit $30,000, I'll include a $500 bumper bonus to take that bonus up to $1,400 for that $30,000 benefit for the first 3 agents that hit it. Now, the rules are, I'm going to start this June 1st, and I'll run it through August 31st for this particular production bonus, because I want to give you guys an opportunity to get licensed through Irene and get your agent number through Washington National. Go to wnbizlink.com, which is our business management portal. Register your number, get your supplies, get access to the internet, to our application. Get trained again by Washington National and make your first sales. So I want to give some bumper time in there as well for you. So I'm going to run this June 1st through August 31st. Your George Bucks incentive runs throughout the year. So whenever you decide to get your 10 apps issued, I'll make sure that you get $250. I'm going to pay this production bonus within 2 weeks after the period ends, or if you hit this bonus threshold before the period ends, I'll pay it right then or within that 2-week time frame, because I have to justify the cost internally. Okay, friends, that wraps up this this program. And all right,
Mark,
folks, that's all. Go ahead.
Oh, I just want to thank you very much for giving this presentation today. I'm proud. Let's go ahead and if you plan on getting licensed, figure out if you need a 90-day form or the contracting made easy. We'll get it out to you. If you filled out contracting within the last 2 years, you should only need to sign a 90-day form, and we can get that out to you. If you haven't licensed or have never licensed with GoldenCare, you'll need to fill out the contracting made easy, which is very easy to fill out, and then you can see our other products we carry also. I want to thank everybody for getting on today. It was a great presentation. It looks like a really nice product to work with. It should help fill our portfolio. Everybody have a wonderful rest of their week and stay healthy. Thanks again for